Good evening and welcome to the Financial Report. We begin with breaking news from Beijing's Finance Ministry. China says it will hike tariffs on imports from the U.S. from 34% to 84%, hours after higher levies imposed on Chinese products by the U.S. Most Asian and European stock markets slid again on Wednesday after U.S. President Donald Trump's latest tariff hikes took effect and his threat to add still more. However, Hong Kong and mainland markets reversed early losses and gained grounds. Japan's Nikkei 225 index lost nearly 4% at 31,714. South Korea's Kospi shed 1.7% to around 2,293. Its government said it would provide help for its beleaguered automakers. The S&P ASX 200 in Australia declined 1.8% to 7,375. Shares in New Zealand also fell. More optimism here in Hong Kong. The benchmark Hang Seng Index up 0.68% to close at 20,264. The Hang Seng Tag Gauge climbed 2.64% to end at 4,689. Former U.S. Treasury Secretary Lawrence Summers said the United States is likely heading into a recession as a result of the ongoing tariff hikes. Summers warned that could potentially lead to 2 million more job losses. Speaking in an interview with Bloomberg TV's Wall Street Week, Summers said the likelihood of tariffs pushing the U.S. into a recession is higher than 50%. He predicts that families could see income losses of $5,000 or more. He stressed that Trump's tariff policies over the coming weeks will be crucial to the economy, noting that levies have now topped tariff rates that contributed to the Great Depression in the 1930s. Summers urged that abandoning the tariff policy would be a more prudent decision as financial markets have been signaling their detrimental effects. Coping with Trump's tariff fallout and the pressure on net interest margins, multiple small and medium-sized banks in the mainland have cut fixed deposit rates. Ping An Bank has trimmed its three-year deposit rate from 2.05% to 1.65%. Mainland media reported that since the beginning of this month, various banks adjusted their rates by 10 to 80 basis points. Analysts said low market interest rates and the need to control funding costs are among the reasons, with room for further cuts in deposit rates after this round of adjustment. Analysts at JP Chase expect the European Central Bank will cut interest rates at its next 4 monetary policy meetings. The investment bank believes with the U.S. tariff policy, the economic growth in Eurozone will take a bigger hit than expected over the short term. Analysts wrote in the research note that the policies are poised to lead to very weak expansion in the next 3 quarters. The ECB has cut interest rates 6 times since June last year, and if it cuts rates 4 more times, the rates will dip to 1.5%. We'll take a look at the latest situation around midday trading in Europe's stock markets. German DAX is down 3.66%. The French CAC sheds 4.15%. German DAX, meanwhile, lost 4.13%. And that's the Financial Report. Thank you for watching.